notably around projects in the UK and the US during the third quarter. And this continued into this week with these negative headlines with the news of Ørsted pulling the plug on ocean wind in the US and taking huge write-downs on some of their projects. So that provides a bit of the backdrop, but we do think we should keep a more reflective, considered approach here. There's no denying that the news has been pretty negative at times, but we can't ignore the positive developments that we've seen as well. And we think that's likely to continue to be the case for the rest of this year and as we head into next year, into 2024. So keep stressing that it's important to maintain perspective and important to realise we're still in a very high growth sector with plenty of opportunities in there for everyone. So let's kick off into the slides. Let's start by setting the scene with a look at the current state of the project pipeline. And at first sight, you can see that it looks pretty positive. It's still continuing to grow quarter on quarter, that full pipeline of products that we have, of projects that we have. I draw your attention to the rate of increase, though, and that rate of increase slowed in that last 3-month period. And our initial expectation 1 month into Q4 is that we expect to see that rate of growth to continue slowing as we go through the end of 2023. Just to give you a quick sense of the numbers we're talking about here, at the start of 2023, between Q1 and Q2, so at the beginning of this year, the pipeline increased by 13% quarter on quarter. That rate of increase between Q2 and Q3 then fell from 13% to just 5%. So quite a big drop down, a slowdown, but not an actual slowdown, more a slowdown in the rate of increase, a slowdown in the growth. And that really encapsulates our feelings about the current state of the offshore wind market in general. Certainly growth, but not as strong as it once was, not as strong as it has been in the recent past. Maybe pragmatically, that shows that there's a much needed sense of realism finally entering the marketplace. So again, to reiterate, it's a market of mixed messages, plenty of bad news, certainly not all negative by any means. And I'll use the next few slides to take a look at some of those mixed messages that we're seeing in the market at the moment. Now, it's all good and well to look at the scale of the global pipeline. We all know there's a huge number of projects out there under consideration. But if we try and get real again and look at what's actually happening, what's recently been under installation, we look at this very carefully to understand the capacity that's closest to coming online. And the headline number here is 17.3 gigawatts was under installation as we got to the end of Q3. It's certainly a positive figure. It's a huge number. Even if you strip out China, which is just less than half of that figure, it's still a huge volume of capacity that was under construction in the third quarter of the year. Again, a positive story. That's the headline number. If we go behind the headline number, what's important to us is that there were no new significant delays on the very large projects that we're tracking. Projects still seem to be able to and confirming that they're going to hit the deadlines. Usually most of those deadlines are for the very end of 2023, and most of those look like they're in play still. So looking at the bigger projects here, like Seagreen in the UK, Vesterhav Syd and Nord in Denmark, Greater Changhua 1 and 2 in Taiwan, all of these big important projects in Europe look like they're going to come in 2023, maybe slip very slightly into the very beginning of 2024. But pretty positive for the large projects that are under construction with no real new delays that we're aware of. Second piece of good news that we see here is the installation campaigns that we're seeing beginning in earnest in the US, South Fork and Vineyard Wind. And again, really, maybe I'm overstressing the point, but I think it really is worth highlighting. We've had a lot of bad news for some projects that are a bit earlier in the design and the permitting phases in the US, but clearly it's not all negative news in the US at all. And we highlight the installation beginning for both South Fork and Vineyard there. Having said that, one thing to watch that we are very carefully watching is the speed of the installation programs. We've seen Vineyard so far certainly looks pretty slow on the turbines that we've seen. being installed. So we're watching that quite closely to see what sort of speed of installation we might see with these new installation techniques in the US. But bigger picture, those projects under construction all looks pretty healthy this year, and I would contrast that with what we saw in 2022. That 2023 looks like a pretty good year for projects finishing on the installation phase. So let's move from there into what we're looking at for lead times for primary components on a wind farm. And the lead time, as we define it, is the length of time from a contract being awarded or announced to the date of the wind farm entering operation. And this allows us to take a consistent view across very different components. And the idea, the theory here is that if the market is getting tighter for these components, lead times should get longer, go up. Vice versa, if the market's getting a bit softer, we would expect lead times to be falling. So that's the theory. What's happening in reality in these markets? Well, you have to look at each market in isolation to really understand what's going on. It's certainly quite nuanced at each subcomponent level, and they're all subject to their own particular drivers, all of which you can understand and explore in the quarterly report in full that we produce. But in general terms, when we look at this combined chart, what can we see? Well, we think we're still at relatively consistently elevated high levels for lead times. And quite honestly, there wasn't much of a change in lead times quarter on quarter. They were pretty static. So why was that? Well, I would argue that in large part, that was because there was a very much a shortage of new contracts being announced in the market. And this was in marked contrast to the second quarter of the year, which is pretty active in terms of contract flow. Q3 was particularly slow. Some areas to highlight there, turbine market was extremely subdued. We got no new announcements. We did get some confirmation of previously provisional awards, but nothing that was new for us. So very slow in some of those markets. Contrast that with what we saw in the cable market shown here on green, with the green line, which was certainly a bright spot. And there were a lot of contract awards here, both for array, export cables as well. Quite company specific on the cable side of things, both Hellenic Cables and Prysmian, both very, very visible with high profile contract awards and good volumes coming through for those particular supply chain companies. So again, stressing it again, but certainly a mixed message when you were looking at different areas of the market. And certainly while there was some negativity, particularly around turbines, other areas like cables saw reasonable activity levels. Slightly different story when we're looking at what was happening with new capacity on the supply side. Just as quick background, we're tracking all of the announcements that we come across for factory expansions, for new build manufacturing facilities, any suggestions that the supply chain is increasing its capacity to deliver in these markets. The third quarter showed a real slowdown in announcements of new capacity expansion projects. That's clearly shown on this slide. Just the absolute emptiness of new things showing on the map. Not much happened, in short, in this section. There were a couple of different things. So we got some plans from LS Cables and Systems and the Offshore Cable Factory, which has just completed an extension of its Donghai factory in South Korea. They're going to continue investing with new production lines there. That's slightly positive news, albeit moderate in scale, in size, and in impact. On the sort of negative side of things, preparations for a new tower facility in Denmark, in Esbjerg, from the old SM Valmont, now owned by Eurosteel. That project was put on hold on a semi-permanent basis. We did also have some very early stage plans that appeared for a potential new tower factory in the US for GRI Renewables. But three things is a very low level of activity for us in terms of those new announcements, particularly if we look at what we saw in the first half of this year and certainly in 2022 as well. There were huge numbers of new announcements, so a real slowdown. So the message here for us is a quiet market, new investment decisions not very forthcoming at all. Need to be a bit careful not to read too much into this just from one quarter and one quarter alone, but maybe a sign of the impact of higher interest rates in the wider economy, and maybe a sign of the general reticence that we see about the future trajectory of the overall offshore wind market. So jumping on to installation vessels, quick one slide here. Again, if you want more details, then we have that in the full report. But if we look at the installation vessel market from a high level, again, a mixture of delays and deliveries from the new build side of things. On the negative perspective, Charybdis, Dominion Energy's new build jackup, was confirmed as being delayed. We had our suspicions, but finally confirmed in public documents. And the date that they have given us now is no earlier than late 2024, maybe getting into early 2025 for the long-running Charybdis saga. It does tie in with some of the news from Ørsted on their US projects that came out earlier this week. Charybdis was contracted for the installation on Revolution and also for Sunrise Wind. I know that the Ørsted news has not been well received by the market, clearly, but in a positive spin on that, it was good to see Revolution Wind getting the FID decision coming through on that. We knew the contracts already for most of those parts of the project, but good to get final confirmation that that project is going to go ahead despite all of the other negative news that came out. So that's on Charybdis in the US. Moving away from the US, one of the sort of trends that we have seen, and we've been tracking for a while now, but good to see it actually coming to market properly and new vessels entering the Asian market, actual Asian owned and Asian operated vessels. So that installation vessel fleet continues to grow in size and also capability, and we're starting to see them really starting to execute on installation of some of those projects as well. A couple of vessels to draw your attention to here is Penterocean and their jackup vessel CP16001, which was delivered and is just about to begin work on Hibikinada in Japan on the pin pile installation. We think that's going to happen very, very imminently. So that's great news, that new build getting to work very quickly, even though it's got a limited number of installations to do. It is kind of learning while doing in that Japanese market, which is good to see. Also in Japan, the partnership between Fred Olsen, wind carrier, and local Japanese company Shimizu is starting to bear fruit. The Shimizu jackup Blue Wind actually got the monopile contract for Yunlin in Taiwan, which will be its first contract outside Japan. So interesting to see Japanese flagged vessels working elsewhere in the Asia region, which is great to see. And that will operate under Fred Olsen wind carrier, not under Shimizu, even though it's a Shimizu owned vessel. So good to see these Asian vessels really starting to make their mark in their local markets. Really positive news flow coming through there. And lastly, but not leastly, I know it's a quick rush through the headlines, but we try and keep these sessions pretty short. But to finish up, let's get back to the macro view and look at what we're seeing in terms of new lease awards. Helps us look a bit further into the future, see what longer term activity levels are going to be looking like. So new lease awards, what picture did that paint? And yet again, you can see I'm repeating myself a little bit, but some lows, but definitely not all bad news. If we look at auction activity, high volumes were definitely awarded in Germany. Also important for us is new countries entering the offshore wind market, and we got the first block awarded in Lithuania, which was great news. That does certainly contrast strongly with the terrible CFD round in the UK that saw absolutely no bids at all. Somewhat similar story in the US Gulf of Mexico process, a real lack of enthusiasm amongst developers, but we did see at least one of those blocks go through to RWE. So that's looking back at Q3, so a mixed picture there. If we look ahead to the rest of Q4, what are we expecting to be awarded? We think it's going to be a pretty slow end to the year, to be honest, for contract and new lease contract awards in the next 2 months. We might possibly see some decisions coming through in Estonia and in Gippsland in Australia, but they may also slip through until the next couple of months and through the next couple of months into 2024. But that looks like all we're likely to see in terms of the next couple of months. But looking ahead into the rest of 2024, we see plenty of auctions opening, lots of activity ahead. So again, this mixed message very clearly coming into view. Our take on this is that activity levels will certainly be high as we go into 2024. To back that up, just the last few days, we've seen very concrete, very detailed sets of auction plans released from Colombia in Latin America, from Portugal, and also yesterday from Greece in Europe. So again, setting up a good position as we go into next year. So I'll leave it there now in terms of the actual presentation. As always, if you want the latest information on any of what we've shown today, please do remember to check out the Wind Analytics platform. Has all the information updated as it happens. So let me pause there, pass it back to Ryan, see if we've got any questions come through, if we've even got any time for any questions.
Yeah, no, excellent. Oliver, thanks for those insightful words. I thought it was a very great discussion and presentation that you just went through. We do have one question in right now, but I do encourage, if you do have questions, please type them in. We are a little bit over time, but feel free to hang on if you want to listen in to these questions. But the first one, Oliver, did we see any supply chain capacity announcements on the anchoring and moorings side of things in the UK market in the last quarter? I gotta expand this real quick. Yep.
It sounds like someone's not that I'm aware of, but it's certainly something we can dig into and have a look and see if we've missed anything. But I'm certainly not aware of any new announcements coming on that side of things.
Gotcha. Yep. Thanks, Oliver. Again, if you do have any questions, please type them in. But while we're waiting for questions, I want to thank everyone for attending today's webinar. I do encourage you to reach out directly if you would like the full quarterly report. It's a lot more information than what we went over today. We do publish this every quarter, and we do a webinar each quarter on the quarterly updates. Or if you would just like a discussion on the Wind Analytics platform, more than happy to go through a demo with that one-on-one with you. Doesn't look like we have any other questions. So again, thanks for attending today. We hope to see you next month, and we'll take it from there. Thanks, Oliver. Thanks, everyone. Bye-bye.
Thanks, everyone. Bye.